Hey, good morning, everybody. Welcome to Tuesday, April 27th. I hope that you had a great Monday and things are going well for you as we get ready to kick off a pile of earnings today. Not much on the macro stuff yet, but it will trickle in towards the end of this week. So, hey, looking forward to that and more with our conversation with Dave coming up here in just a second. But before we do that, let me just remind you again, I know I sound like a broken record some days, but there truly is only one thing that any of us can control within our portfolios, and that's how much risk you have. And if you don't know what that risk number is in your portfolio, it can be devastating. Give us a call. Let's walk through our financial x ray. Give us a call at 863-382-0037 or go to our website at statlerfinancial.com. Hey, we're coming up next with Dave.
Here it's 1249 at your 105.7 Light FM. There was an interesting day on Wall Street yesterday. Got one new record out of the bunch. NASDAQ looks like it's recovering, and the Dow was, Let's find out what's going on this morning with your money and your retirement plans. Check in with Statler Financial Services' very own Phillip Statler, who's on the phone. Phillip, good morning. How are you?
Hey, good morning, Dave. Doing well today. Monday was, it was a split day, but hey, better than what we had seen in weeks past.
Oh, good heavens. I'll take small changes any day of the week. Dow, just to quantify it for everybody, down 62 points yesterday, which is only 0.18%. Standard & Poor's 500 was up 7.5, and that was enough to set a new closing record on that index. Start the day out at 41.88 this morning. NASDAQ was up by almost 0.9%, up 122 points, which ain't bad performance. When we first got on the phone together this morning, I was looking at the shifts on the indexes, and I'm kind of wondering whether or not we're looking at the big money allocations kind of doing some shifts away from those stable old dividend stocks and whatnot in the Dow and looking at something more on the growth rate in the light of the potential for a corporate income tax increase.
Well, that very well could be. We really won't know how that thing shakes out for a while down the road, right? I mean, we start to see a little bit of indications of that maybe now, and it's a maybe. But that's one of those things is it's really hard to quantify and really look at the indexes and say that's really what's causing some of it because we've had such a run up, and so and the other thing is that the article I read this morning was basically the capital gains rate effect, because I think that may be bigger than the corporate income tax rate, is only going to affect about 0.3% of folks out there. So that combined with corporate tax rate increases, it could put some pressure on the indexes going forward.
Yeah, you and I both read the same article, and we both looked at it. It was kind of akin to the articles that followed up after the $15 minimum wage became more and more common. The companies don't like it. That's obvious. Anything that runs up costs or changes the world doesn't exactly get popular with the companies that we buy and sell stock in. But at the same time, the general rule of thumb, as far as publicly traded companies anyway, was that it was going to be, not necessarily favorable, but not as unfavorably as we were hearing about it on the first blush. And I kind of get the feeling after we had that first immediate precipitous reaction to the proposal for those two tax rate increases, now Wall Street is sitting back and saying, yeah, don't have to like it, but we'll cope, is kind of the universal reaction.
Well, and I think the other part of that, Dave, is wait and see. Does it really happen? How long does it take to get through the process of Congress before it actually becomes law? And will it become law? I mean, that's the other. There's still some question about, can he get it done? And will he get it done? And so that's still there may be some optimism out there on the other side of the coin, Dave.
Yeah, it's true. We do have a very closely split Congress, and getting anything of any great size through Congress, unless they can figure out how to do it through that reconciliation mechanism, that's really a hard thing to do these days. So it's an up in the air thing. I was just looking at the shift between the different indexes and thinking, okay, fine, the companies that are going to get some pressure from the increase in the tax rate are the ones that are probably being held onto or moved out of by just a little bit, and the buying trend might be to the ones that aren't expected to make any money but have some cachet value to them.
Well, that's true. You just don't. Again, we just kind of have to wait and see and watch it and wait to see, because here's the deal: it is, we still have the Senate is so close, right? And you do have the senator from West Virginia. You gotta love him because he's a Democrat, but he's a very, very fiscally conservative Democrat on that side of the coin. So he actually, when it comes to taxes and spending, he's more closely lines up with the Republicans than he does the Democrats.
Oh, yeah, you put Joe Manchin in 35 other states and he'd be a Republican without a doubt.
Yeah, that's right. So
it's up there. The other thing, talking about that wait and see thing, is the Federal Reserve is meeting this week, and tomorrow afternoon we're going to get that customary release from the Federal Reserve. Nobody expects them to make any changes on the interest rates, but I kind of got a feeling that this is going to be one of those times that we're going to be parsing the wording very carefully when they start talking at 2 p.m. tomorrow, wouldn't you guess?
I would say so, too. I mean, everything I see says, hey, they'll stay put for 2021 despite no matter what happens to the economy, that no matter how fast it grows, no matter how overheated it gets, they're not going to do anything for 2021 is the gist of what I'm seeing on all the articles I'm reading.
Yeah, I kind of see the same thing, and even the Doves and the Hawks are agreeing nothing's going to happen for the rest of this year interest rate-wise. It'll be more than anything else what they say. Well, we're seeing weakness here, strengths here, and that could make just parsing the wording on the release could be the biggest market mover tomorrow.
Yeah, you're right. It really could, because they will analyze every word and how they said it this time versus last time.
Understood. We are in the middle of earnings season, and this is one of those days in which I was reading something like 180 different releases coming out during the process of the day for quarterly reports. You got a few out early this morning and some household names, I understand. What are you hearing?
We do. So let's start out with the blockbuster, the big surprise of what seems to be, and that's Crocs. Crocs shoes. They had their best quarter on record, I believe, they said. And they raised their full year guidance. Listen to this, man. They just really hit it out of the park. I mean, they beat on revenue by over $45 million. They came in at not quite double the earnings expected, but came in at like $1.49 compared to 89 cents that was expected. So they did get some help from, Justin Bieber. He liked the shoes, and so I'm sure he was texting some stuff out there and stuff. So, but
that's right. I forgot the Biebs likes Crocs. My initial reaction is I had no idea there were that many hipsters in the world.
Hey, they are up 11% this morning, Dave, substantially beating their 52-week high right now. Their old 52-week high was $86. They right now, if they opened up, it'd be at $94 a share.
Wow.
Yeah.
For plastic shoes with holes in them. Okay.
Hey, it takes all kinds, right?
Further proving you can sell anything in this world.
That's right, man. All right, so then we've got some other household names. United Parcel, UPS came out. They beat by over $1 a share on earnings. Revenue was above forecast as well. Obviously, with continue to see more and more online sales, and that continues to be the trend. They're doing well from that standpoint. They're up 8.2% this morning, and they'll open at a new 52-week high also.
And they're at the top of my blue chip big winners list this morning, so that makes sense.
So yeah, so good news there. We had some other household names that beat, but their stock price is still getting hammered a little bit. We got Eli Lilly, the drug manufacturer. Now they did fall short, though. I will tell you, they missed on earnings. They came in at $1.87. They were supposed to make like $2.14 a share. Revenue also missed. And then, this has got to be hurting them bad. They lowered their full year guidance. We haven't heard that much really lately, have we?
Not really. I mean, we've either been getting no or positive guidance.
Exactly. So they're trading down today a little over 3% this morning.
Ouch.
Yeah, that's not good. General Electric, which has just struggled the last probably 3 to 5 years trying to find themselves again, they did eke out a profit of 3 cents a share. That's a penny better than expected. However, revenue missed. They missed on revenue, but their free cash flow, which is another one of those things that they measure, was a little better than expected, and so they're still getting beat up a little bit this morning, down 2.3%.
You got to pretty much hit on all cylinders to make the investment community happy right now.
Yeah, that's the case. That seems to be the case. Hey, let's talk about Tesla before we run out of time.
Oh, yeah.
Tesla reported earnings. They again hit it out of the park. They made 93 cents a share. That was 14 cents better than expected. Revenue topped estimates. But you have to really dig a little bit because it's not because of car sales, it doesn't look like. They boosted sales because they sold some of their environmental credits. You know, those credits that they get for those electronic e-vehicles. And then they also, get this, they liquidated some of their Bitcoin holdings to make some profit. So
can't sell the cars, sell vapor.
Exactly. So, hey, but you can tell the stockholders and the traders, they're not missing that either because they're trading down today about 2.4%.
Hey, I thought they were all as stoned as Elon Musk is. I guess they actually do read a balance sheet once in a while, don't they?
Every now and then. I thought that was quite interesting. Hey, we talked about Mattel. I think it was last week. Hasbro comes out today. They beat They beat by about 35 cents a share, came in at $1. Revenue, though, was a little shy of estimates. Obviously, the TV and movie production related toys were delayed because of the pandemic. And so they're down a little bit this morning, down about 85 basis points before the market opens up this morning.
That one I was kind of curious about because we've always noted that Hasbro and Mattel seem to be a zero-sum game. The one that gets the big movie contract is the one that does well, and the other one tanks. This time, with nothing going on for either one, they both did okay.
Yeah, they did okay. You know, obviously, I think Mattel they actually jumped on their earnings, and Hasbro's falling on theirs. But hey, let's go with, we talked about airlines, I think, quite a bit last week, but we have one more reporting today, and that's JetBlue. They, as all the other airlines, they lost money, but they lost less than expected by about 20 cents a share. So that was good. Revenue beat the forecast. They kind of echoed what everybody else has been saying. They see a rebound in passenger demand. And so they're up 1.2% this morning.
All righty. And I know today we're going to be hearing about Google, the alphabet stock. So that's going to start our flood of tech stocks starting tomorrow morning, isn't it?
Yeah, it really will. We'll get more and more of those guys reporting as we move forward over the next week or so.
I got you. Split vote yesterday for reasons that really we could probably discuss until we were blue in the face. But bottom line, it wasn't a bad day overall. 45 minutes before we open this morning, Phillip, what are we doing so far?
You know, we're going to kind of continue down that track of a little bit of a mixed bag. We've got the Dow down $12. You could basically call that flat right now. The S&P 500 is up a little less than 0.1%, about $3.40. And then we got the NASDAQ up almost 0.2%. The Russell 2000, it's kind of leading the way today, Dave. It's up 1/3% this morning. So mostly in the green. Hey, commodities side, we're making some headway too. We got silver up 0.5%, gold's up 0.2%. And then the one you and I really don't like, it's crude oil. Had a massive day yesterday, closed up for the day and up again this morning by about 0.9%, getting closer to that 62.50. It's at $62.47 a barrel right now.
Yeah, it's over 62. I start disliking it these days again. My standards have changed. Overseas markets, Asian Rim, absolutely no trend. Everybody was moving like 0.04% at the close this morning. European markets are generally, I'm getting back to where I was supposed to be, and I know where I'm at. Yeah, there we go. The European markets are a shade of pink, but they really aren't moving south very much. We're talking about 0.19% overall midway through the European trading day. We're talking about these earnings, Phillip, that you got to hit on all cylinders, and stocks that actually beat the street still end up getting tanked. Picking your own stocks when you're messing around with a retirement portfolio is a really risky process. How do I get a hold of you to find out how to minimize my risk?
David, give us a call at 863-382-0037. Go to our website at statlerfinancial.com. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 730.
And to check in tomorrow to see what's going on with your money tomorrow morning at the same time here on Light. Phillip, thank you so much. We'll see you then, all right?
All right, man. You have a great day.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you guys for joining us today. Hey, please like our page on Facebook. Share this with your friends and family. Hey, I'm going to share right now. I've been sharing it throughout the show today, but here you go. Here's places that you can listen to us on a daily and weekly basis. You can also download their app for both of those radio stations and listen no matter where you are. So great opportunities to stay informed. Have a great day. Hey, I look forward to speaking to you again tomorrow. Take care.